Good morning, everybody. Welcome back to Schwab YouTube coaching channel. It's our Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from a beautiful and sunny Denver, Colorado today. As Wednesday, and as often the case on Wednesdays, joined by my friend and fellow coach, Brent Moores. Good morning, Brent. How are things in your neck of the woods today, sir?
Things are going pretty well here, Kevin. Glad to be on with you, and yeah, talk about the markets, do the normal schedule, and I think it's a good way to start the day.
I couldn't agree more. We've actually got something this week a little different, finally, everybody. As you all know, the market's been a little bit in pullback mode. We'll see to what extent we get some continuation on that, but that's what we'll cover for you today. Obviously, a good look at the charts of the market, some stories, some stocks in the news, of course, as we work through all of that. Take a moment and say hi to Cameron May there in the chat. He, of course, is going to manage the discussion there for us. You are welcome to post for the duration of the show. As a reminder, we love hearing from you. We do try to bring your questions to our discussion as we work through things here, so you can feel comfy posting there throughout. We'll keep an eye on things as well. Follow the three of us on X, everybody. Cameron May CS, Kevin Horner CS, and Brent Moore CS. It's a great way to follow and engage with your fellow presenters here outside of the classes that we host for you. You know, you got limited time in classes and hosting sessions, so X is a great way to engage and leave comments, leave questions, follow up the charts we post, etc. We're happy to hear from you there as well, and absolutely make sure you're subscribed to the Schwab YouTube coaching channel here. Let's go ahead and cover some disclosures, and then we'll get into the discussion, everybody. Please remember that our conversation here is exclusively informational and educational. We do not make recommendations. We do not make endorsements for a specific approach to trading the market here. We will cover, though, technical analysis. As we do that, we bring into our discussion concepts and strategies that traders of various timeframes may choose to employ when they are trading. But technical analysis should not be the exclusive means of your decision making. We think it can be a part of your puzzle. We think it can aid you in making decisions, but don't rely only off technical analysis. Additionally, we can look at the agenda briefly. If you're new here, we take a top-down methodology. What that means is that we start broadly looking at the major indices. We'll move into industries, sectors in leadership positions or lagging positions today. We'll get some ideas as to how money is moving around the market. And then, as I noted, we also got some stocks in the news today, a number of key companies with which many of you are familiar, I would imagine. So before we do that, I'll just remind you to make sure that you've got the schwab.com events page bookmarked and you're keeping an eye on things. Our upcoming events here, we're looking out to late September already, and that's because all of the events in advance are already booked. We have had a fantastic year getting out to see all of you, and the amount of interest amongst our viewers and clients has been tremendous. So please, if you're wanting to attend, make sure you take advantage to get registered early. These classes do fill up, and we will absolutely be at capacity going forward, I would expect. So if you're looking to get to one, make sure you're on the ball with your registrations. Okay, Brent, let's jump to the S&P. We were talking this last whole 3-4 days about what's going on, and we're pretty much just kind of fighting it out at the 20-day moving average, it would seem, aren't we?
Yeah, that seems to be like the line of demarcation here of what, are we going to stay above that or below that? Today we're not off. We're off to kind of a tepid start. It's up a little bit, I guess, not much, but we'll see where that goes right now. But we had some data on Friday that wasn't real good. The market didn't look too kindly upon. We had some data yesterday that wasn't great either necessarily. But the market's fairly resilient, and hey, we've had a pullback. But whenever you get a pullback and you get a little panicky, look at the bigger picture here. And the reality is, we're way up from where we've been over the past few months.
Yeah, I think it's easy to lose sight of the move we've made, and that when we pay attention to the daily chart, it becomes very easy to lose sight of. So I agree. Obviously, everything in perspective makes a lot of sense. Now, that said, Brent, we are definitely seeing a different development over the last 4 days. That being the the pullback and not the immediate snap back to back into trend. The reason I say that, as we drill into what's been going on here, you'll see that the high we got on Monday's enthusiastic open ran right to the low of the Thursday gap ledge that we then had into Friday morning. Yesterday, we tried to make a new high, couldn't hold it. So we have this deep red candle kind of working its way more than halfway down the big green candle we had from Monday. That's not instructive, or it's instructive, but it's not enthusiasm, right? And if we drill into a shorter term period, maybe looking at, let's do 5-minute bars here over the last few days, I think traders can see the areas of import here, Brent. I mean, gap level, yes, we were above it, albeit very minimally, and then another gap level right below us. And so I think this represents, for short termers, Brent, some ideas as to maybe directionality in the remainder of the week here. Your thoughts?
Yeah, true. I mean, whether we're looking a little longer term or shorter term, here we have a little shorter term. When you see us bounce resistance or support levels, those are potential trading possibilities. A breakthrough resistance for some traders would indicate a more of a bullish stance that you may take, and vice versa if we break through support level. And by going to the shorter term chart, it makes it perhaps a little bit easier to see which, some of those key levels in the near term. And given the volatility we've had, it wouldn't be surprising if intraday, even today, we break above 1 or below 1. Here, we'll just have to wait and see. One thing this week is, last week was chock full of a ton of economic and huge earnings reports, from Mag 7 type stocks. This week, we still have a lot of earnings, but it lacks the big names. It may lack some of those market moving type earnings events this week. So it may just be less driven by some of those kind of headline type events and just the market doing its thing. We'll just have to wait and see on that.
I agree. Not so much headlines as it relates to what we've gotten from earnings and big name companies, but headlines as it relates to macro data, which is really interesting relative to what we've been doing. That job revision number we got on Friday was a shock to the system. It's what led to the breakdown in the SPX. It's why we got our first close below the 20-day in 70 sessions. And then we're fighting it back again. And this is one of those scenarios where traders are trying to define their confirmation, of course, right? Are we back above the 20-day with any conviction? Many traders would say, no, we are not. I mean, obviously, we're right at the level right now. The 20-day is at 63.13 or 63.14, and here we are at 63.08. So we're a little below it. But if you're looking for confirmation one way or the other of a breakdown or a return to the trend, we haven't gotten it in many cases, Brent. I mean, we're looking at 1 day here, 1 day there. And that's why those white lines that are on this chart from the 5-minute bars make sense for a lot of short-term traders. They can be maybe the short-term tipping point where a trader says, all right, I'm going to tighten up my position, build more cash because we move through the lower short-term support, or I'm going to add more exposure because we traded through the resistance band above, and now I feel like we could go back to highs. Traders need to have those theses, though. They need to know what they're going to do here, right?
Yeah, any trader, bullish, bearish, you have to have kind of a hypothesis or about what's going to go on, the approach you're going to take to the market. Okay, and be open in case you're wrong. But you can see sometimes when you get a pullback in the market, I think it's valuable to look back at past pullbacks and see, is this kind of in line in character with the past pullbacks that we've had, and or is it more accentuated than some of those past pullbacks? And so you can look back and see, and you can see, well, it's pulled back. We're a little bit below we've gone below that 20-day moving average. The other ones recently, not so much. Also, look at that RSI down at the bottom of the chart. We were just kind of hugging up near that 70 line for the last month or more than a month, like 3 months, I guess,
Yeah.
here, pretty close to that. Well, we've dipped down. We're back about 55 level. That's kind of more of a mid-range. So it's just could be a sign of a weakening of the trend there.
Rams is asking a great follow-up to the discussion around confirmation. You know, how many days or how many bars does a trader make or need to make that decision? And ultimately, we can't answer that, of course. Our encouragement is to have that defined as a trader. Some traders, it's 1 day. Some traders, it's 3 days. For some, it's longer than that. If you're a long-term investor, you're probably not even paying attention to the daily chart. You might be paying attention to the weekly chart and looking at the standard trend here. I mean, the purple, let me hide the very short-term 20, for example. Look at how consistent the 40-week moving average has been for just traders in the S&P who are wanting to stay long. You've had a very limited bout beneath the 40-week SMA here in the weekly view to suggest where you shouldn't have been long. And then when you got right back above it, many traders would have just re-exposed dollars, Brent. So it's always a conversation that is very personal to each and every trader, isn't it?
Yeah, it's so 2 points there. One, a lot of it is going to depend on the type of trader you are, long-term versus short-term. Secondly, it's not like it's necessarily all in or all out in terms of your trades. It could also be, hey, shifting allocations, changing stops, things like that, that are going to are the actions that you may take if we get a break, or if you go from full on risk on to maybe more risk off. Maybe you're just kind of lightening up on some positions and not just completely, exiting huge parts of your portfolio there too.
Yeah, certainly there's a lot of traders out there, Brent, who just take the approach that says, under what I view as support, I sell a little and maintain other portions. And if we recapture trend or move back to highs, or indicate that the trend is apt to continue, whatever the view of the trader is, they start to redeploy that money. And instead of doing it, like you stated, all in and all out, means you have to be right both times. The time that you exited everything and then the time you decide to redeploy that money, you got to be right again. And so that's one of the reasons traders will kind of piece in and piece out, add aggression, reduce aggression, or add dollars to the market and pull those dollars back when it makes sense to do so. So again, as always, what we can speak to in this class is the idea of having that plan. We can't help you define it. We can give you some concepts to work with, but ultimately it is our individual approach as traders that we must define, that then gives us the steps to base those decisions live and in the moment. And hopefully that those laying out of those steps, that playbook to your trading, is what will make your decision-making process efficient and easy, and hopefully unemotional as much as possible. Okay, so there's a quick look at the S&P. We're probably going to see some consistency here as we move into the NASDAQ 100, Brent. We are also briefly below the 20-day, bounced back in, again, right at the 20, fighting things out here. I imagine a lot of your thoughts that we've had on the S&P are going to be consistent here.
Yeah, a lot of the market's being driven by some of the big names in the market, and a lot of these are like big tech names, big communication services, and industrials maybe, and those are the ones that are kind of moving the market. So you're seeing the SPX, the NDX doing kind of a pretty similar thing. Some of this, it's a little different, if you start to look at go down, and the breadth isn't necessarily matching exactly what the large caps are doing. But in general, the market is kind of doing the same thing, whether we're looking at NASDAQ or SPX and the Russell as well, to a certain extent.
Yep. I tend to agree here, Brent. And if we looked at what's going on in that same 5-minute bar, everybody, you're going to see a lot of the same stuff here, right? We do seem to have I'm going to activate this line, and let me just see what seems to hold a little bit of water here. So we've had this breakthrough, and then you've got a support zone. We've bounced off that 20-period exponential moving average today. So far, so good in the sense that we opened weekly and are getting a little bit of a bounce here. Of course, moving through, the peak, like so, some would say, oh, well, we've got an opportunity today, and they're right. But you can see that there's still some areas of short run resistance overlaying us or overhead here at the highs that we made in the afternoon there yesterday. So let's see if we can get through this. Again, when we're looking at this on a 5-minute bar like this, everybody, it is very tight, Brent. So this may not apply to a lot of our viewers, but I'll say it still becomes very helpful for the trader who might be looking to pinpoint an exit or an entrance to the market.
Yeah, it's we're talking shorter term here on this, and it's, I can't make any guarantees, but it seems unlikely we're going to stay within this range for more than, a few hours or something like that. Mm-hmm. But yeah, I guess you never know. But a lot of longer term traders may not even look at this chart, the zoomed in chart, this 5-day, 5-minute chart. Or if they do, they're probably not going to be making many trading decisions off the real short-term chart. Similarly, a lot of real short-term traders may not look at a weekly chart or something like that, where you're looking at a 3-year weekly chart or something. A lot of shorter-term traders may not factor as much into that, although sometimes it is beneficial to look back for older support levels or resistance levels or things like that.
Yeah, it's interesting how historical price levels are important. And it's mainly because the traders that trade these positions have a memory and have a history of trading them, and those prices still stand out as valid to a lot of traders. So it always pays to go back and look in history and make sure you're increasing your time frame, looking at a different window instead of the daily, utilizing your weeklies and so on. So we'll see how things go with the NASDAQ here. Eyeball that recent lows, though, everybody. Fair bit of support in the ballpark here of around 22,700 or so. You can see that we danced on that line for a week before moving higher. We tested it with the low from Friday. That seems to be a validating price action, Brent. And, the truth is that there's a possibility that the next time we test that level, we see the 50-day kind of in line with that same level. And that would even strengthen it further a little bit through confluence of data.
Yeah, I think for a lot of intermediate term trend traders, that would be a pretty key level. If we're breaking below that, at that point, we'd then be getting a lower low. Mm-hmm. And breaking support, the horizontal support, the moving average type support, that would show much more significant weakness in this. Right now, it just seems like a quick pullback. We'll see. We've had little, pullbacks before. Admittedly, this one's a little bit deeper beyond the 20-day moving average, but still, we've had some pretty significant pullbacks here over the past few months, and they've promptly bounced back. I think it's still a little early to say whether this is different this time in terms of the bounce back or not. The next few days will tell us, though.
Yeah, I tend to agree with you, Brent. Still too early. We are seeing a difference in the patterns and the way things are acting at the 20-day, which is notable. And it might be enough reason for some traders to become a little more defensive, especially if you've been long since we got above the 20-day, as an example. The reason I say that, everybody, is that the likelihood is if you bought in above the 20-day, you might be up 20%, 24, 25%, maybe more. And a lot of traders aren't keen on giving back some of those profits. And so management of trade will become a big part here in any substantial pullback. Right now, it's a very basic, very limited pullback. I did want to answer one more question there about the so-called Horner Roll there, Villager. Again, let me reiterate this one more time as I'm going to shift this over to give us a visual of the Russell real briefly. But I just want to point out, when we talk the Horner Rule is essentially reminding us to define our own process, and more specifically, what you deem appropriate for confirmation. Are you the trader who is comfortable when we test a level of support for a single day and wants to join the trend based on that 1 day test? Or do you want to be the trader with who awaits more confirmation? Do you want a hold move, like, for example, the day we got yesterday, 2 days ago, excuse me, on the Russell here, Brent? Big green candle. If this red day was our low, well, then the next day we closed above the high of that day. Brent, that could be an early entrance signal for some. But again, many traders want even more confirmation. But the point isn't to let me tell you what confirmation should be, but rather to understand you need confirmation to make consistent and comfortable decisions. And each of us define that confirmation ourselves.
Yes, consistent, and it makes and consistency does some things. It's not going to guarantee you success, although I will say a lot of traders, I don't know any traders that don't, but probably that won't, swear by the importance of consistency in terms of results. But what I would say, in addition to the additional benefit of consistency, is if you are consistent, then you can judge your history of your success and how things are going with your trading. Mm-hmm. And if things aren't going well, then you can go, well, I know this is what I've been doing in the past. This isn't working. Maybe I need to reevaluate my system or what I'm doing. Or if things are going well, hey, this is what I've done in the past. I'm probably going to continue to do that in the future. Doesn't mean the market can't change and your results can't change. But if you're inconsistent, then you can't really evaluate it. I mean, think about it like a science experiment, so to speak. This isn't science exactly in the same way that we're doing in the chemistry lab or something like that. But if you don't consistently do the same thing when you're doing an experiment, how can you judge your results on your experiment here? You need consistency to be able to have confidence going into the future and also to being able to judge what you've done in the past.
I think that was an exceptionally well-stated argument. In fact, the example of being a chemistry major for going through these exams or these tests or what have you. Yeah, you can't change your variables from one test to another and expect to be able to understand the detail you're looking at, right? You have to be able to relate it to something. So carrying that consistency will definitely benefit the trader who's trying to ascertain, hey, did it work this time? Did it not? Why didn't it work? What can I change now? And then I can start to have a different thesis, a different plan if necessary. But I think that was a really good analogy there, Brent. Thank you.
Yeah, no problem, Kevin. One other thing, and one difference is between, say chemistry and this is chemistry. You add your sodium chloride to whatever, you're going to get the same result each time. This isn't, it's not going to give you an exact same output each time you do the same thing. There's a lot of variability on this. So you need to be more patient with your system, and you can't judge very well from, 2 or 3 different trading attempts or something like that. But over time, you could probably get a better picture there.
Brent, we have a really good question in the queue that I'm just going to put a pin in for the short term here. I want to talk about John's question, given the external factors, what the things that we talk about every day here, Fed, tariffs, etc. We're going to continue the conversation around that. I want to make sure that we take a look at the Russell briefly and then move into some of that macro data. And I'd like to kind of answer John's question as we do that. So first of all, Brent, let's talk briefly about the Russell. We've made a nice bounce, like I said, the last 3 days here, testing the 50-day moving average at the purple line. Nice tail below it, indicating weakness that bulls said, no, we're going to step in and support it here. We're going to close at the 50-day, and then we got some continuation. We can set our risk here relatively comfortably, Brent, because if you're a Russell holder, trading back below the confluence of the 50 and the 200-day now would be a significant bearish development if it were to occur on a closing basis where maybe we took out the recent lows in here. So if nothing else, as we often say, Brent, technical analysis doesn't tell us what's going to happen, but it lets us set our risk properly. And I think that's an important aspect of what we see here in the Russell.
Yeah, notice the difference in the Russell. We tested the 50-day. The Nasdaq and the S&P 500. We broke the 20-day. We didn't really even get in that close to the 50-day here. So that gives us kind of a very clear level that I think a lot of traders, at least, would consider to be a clear support level here. And so it does allow us that kind of just a more recognized, I think, support level, more easy to discern support level is maybe the way to say it, than what we have on the SPX or the NDX here. So regardless of what comes, regardless of what news comes out, that level's that level, and that's something we keep an eye on here.
This is one of those factors I think that may allow us to answer John's question in a minute here. As it relates to the Russell, Brent, if we have an uptrend working, one of the key components that many traders are going to pay attention to is, can they invest in small cap positions? So if you've got a bias that is positive for small caps, let's say interest rates going lower, which we could certainly validate with what we've seen in yield of late. There's been a bit of a pullback to an area of support, and it's been, relatively speaking, supportive of the bounce we've had in the Russell. If yields are going to continue to fall, that likely is a bit of a tailwind for the small caps, and that might give traders reasons to maintain long positions in small caps with a little bit more confidence. And ultimately what I'm trying to get at is that, John, relative to John's question, if we have uptrends working in large groups, well, then hopefully that can give you the confidence to maintain your positions, and assuming that the trend you're watching is, sitting on support, for example, Brent. If it's part of that, if the small caps are working higher and the stock you have is a small cap stock and it's at support, the thought process could be as simple as, well, the trend of the small caps is up, therefore we could have more confidence that the stocks within small cap space should also continue to rise effectively. Now, there's going to be some extra variables in there, of course, but at a very base level, it can be as simple as that, can't it?
Yeah, and that's one of the beauties, so to speak, of technical analysis is it gives you these discernible points. Look, it's very difficult to predict what, look, I don't even try and predict what the economic data is going to tell us in the future here, but it's certainly a challenge to look at the economic data or to predict what, say, tariff policy is going to be or something like that, or the news is going to be in that regard. That makes it very difficult. But this is something that people can rely on. And again, technical analysis isn't the sole means of investment research, but it does give you kind of these key levels that make it, that can help you when to change your decision making regarding your trading there.
Yeah, I think so too. And ultimately, all of the factors, tariffs and the Fed decision making, all of that, everybody, is built into every bit of this price action, whether it be the 10-year note or the Russell 2000 or the semis. We haven't talked about the semis yet. Let's bring this up. But ultimately, Brent, everything that is known in the market is part of the price action. And we can never assume that we know something that the market doesn't. That is 99.9% highly unlikely. The market knows all of it. Okay. And so price action is a direct reflection of that. I think that's a helpful reminder as well.
Yes, that's one of the differences between like technical analysis and, say, fundamental analysis or macro analysis. The argument is that the technical analysis is factors that those aspects in, and it's reflected in the price. And if you guys have ever tried to, say, jump ahead of news by doing a trade, it's very difficult. I'll tell you this. It is very often I am sitting on say a tick chart or a very short-term chart, okay, just a 1-minute candle chart or something, after hours looking at the market when earnings comes in. And it goes up and it goes down and it goes up and it goes down. And it is very difficult. It's a skill set that I don't have to try and predict what, see the news, see earnings on AMD or something, which had earnings last night, by the way, and is affecting the SOX index. It's very difficult to jump in ahead and see the earnings and, I'm going to make this trade based on this before anybody else does. The computers are faster than you, I can guarantee you that. And a lot of the trading is done by computers.
Yeah, it's true. It's one of those main concepts, though, Brent, that we learn way up front in understanding what the market's all about, that the market discounts everything. The market knows all. The market will move based on everything that is known and sometimes things that are unknown, right? Some rumor detail, but that rumor is known as a rumor that can drive markets as well. One other key is to remember that the market is not the economy. The market is a forward-looking animal. What we see here is likely looking into the future, 6 to 9 months in terms of expectation. It's why we see stocks rally frequently in advance of earnings on expectation of delivering on those earnings, Brent, and then not having it play out that way. I think this might be an ample opportunity to take a look at AMD, for an example, on the heels of the semiconductor chart there. Brent, they have been rallying super strongly. Now, a couple of key details here. You've had a wonderful trend line break back here a few months back. And since that occurred, the stock has just been off to the races, man. I mean, it recaptured the 20-day a little bit earlier, but it's been basically holding new support at the 20-day. But Brent, they did not deliver as expected on the earnings, and that's the reason for the move lower on the open today.
Yeah, it is. And getting to, I don't want to throw us off the point, but getting to what I was mentioning before, if you looked at AMD right when the earnings came out, it didn't immediately drop significantly. This morning, you look at this, and how much are we down? 5-6%, something like that. Yeah. It's the first minute or two, it actually did okay there, and then it dropped, and then it kind of just degraded from there for the most part. But because people kind of just took their time, they had to kind of delve into the numbers because a lot of data is released on these things, so it's hard to predict these moves here on this. And we'll see though that you can see that initial jump there just on the first minute of the day before then it really just kind of tanked on that. And so if you're a trader looking at that, trying to hit your buy button or whatever like that, and you see that breaking up, you may be going buy, 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 and then boom, you're whipped out of that. So it's just difficult. I mean, I'm not trying to say you can't have success doing a certain type of trading or whatever, but I just think it's very difficult when you're zooming in to that level to have that success. But we'll see. This is, the market. AMD was going up in the days preceding the earnings. So, I mean, clearly people thought, hey, we're probably going to see something positive here or something like that. Well, they're wrong on that.
Yeah, at least initially, right? I mean, now we're digesting the news, the actual report. Yep. We're going to find out if the 20-day is support for us basically today, tomorrow, into Friday. We're going to find out whether this is valid. Some traders would look at this and say, darn it, I had been missing this rally. Well, this might be the chance for some traders to expose money to AMD. It is down relative to the recent peak at 182 or so. If we come down to the 20-day, we'll see that we're off about 10%. For some traders, that's more than ample to get them into a position. Other traders might say, yeah, I'll wait and see. Maybe we can get back to this horizontal support around 148, which at the time might be coincident with a 50-day moving average. Maybe they'd feel more confident there. But I got to point out, Brent, even the RSI is not aggressively bad. We're pulling back into the zone of what many traders would say would be considered support in the RSI on a proper pullback to a trend line like the 20-day moving average. If the mid-range of the RSI at 50 maintains, many traders would say that is oversold conditions and could be opportunity to join the trend.
And it may not, I mean, earnings aside, having a pullback after the big, massive run that we've had, not a surprise. I mean, if you look back even, it's not maybe to the same extent, but along the way in June, it had rocketed up and then it pulled back to that 20-day, right? And so when something goes up super fast, often you have quick retracements along the way. Question is, do we bounce and do we continue up, or does this continue to break down here? But that's why we use the technical analysis of using that 20-day moving average.
That's right. What's been working has been the 20-day. It remains to be seen whether that will carry going forward. There are some headlines with this, by the way. I didn't find any upgrades or downgrades on AMD, but I saw a boatload of price target adjustments on AMD. So let me share those with you, everybody. Deutsche Bank raising the target on AMD to 155 from 130. Morgan Stanley raising to 160, lowering to 168 from 185, maintaining an equal weight. JP Morgan increased from 120 to 180. Raymond James from 120 to 200. And then finally, Melius Research raising the target to 205 from 175. None of which are guarantees to be achieved. Those are analyst targets based on fundamental balance sheets and most likely scenarios. And again, the trend here is interesting. Could be opportunity for traders to expose new money, but bears watching here at the 20-day. We'll see if we actually maintain it here. I would venture to guess any significant move through the 20-day on an intraday basis could bring in some stops, as James is pointing out here. Some traders might have been stopped out a little earlier, but mainly because they were working with something tighter, like potentially a 10-day moving average would certainly have gotten you out of it. But today's action is right to an area that many traders would call supportive in nature. Okay, Brent, let's keep going here. We have some other interesting stocks in the news here. I thought we could also peek in on NVIDIA as part of this AMD discussion. Take a look and see. There's not been any bleed through here, Brent.
Yeah, Kevin, let me just address a question in the chat. Eric says, where do you see the upgrades? Kind of an easy way to do is use that. You have linked to that live news in the left. Kevin's already there. He has that. That's just one of those, what do you call it, gadgets on the left there, live news. And if you link it, Kevin has the purple 5 there on both. Doesn't matter what your favorite number is or color, but you just make them the same on the chart and the live news. And then when you bring up a stock like AMD, you can look through and you can see. And as I'm just kind of scanning down the news headlines, I see Goldman Sachs adjust price target, Truist Securities adjust price target, Deutsche Bank adjust price, and so on. So if you want to read any of those, you can just click on the news article and it'll give you the full deal on that. So I think that's an easy way to check out that news there on the.
And then there's another one, and that is the opportunity to use the lovers and losers watch list and do the analyst upgrade or analyst downgrade. That's a dynamic list. I hope you noticed that, everybody. When I selected it, you'll see the target here, the purple or pink target defines it as anytime that a stock gets an upgrade, it's going to then make it to this watch list for you. So this would be one way to keep an eye on upgrades and downgrades on an intraday basis. You can see there are some upgrades here. Archer Daniels in the, are we calling that the Staples? We are. Okay, so Staples there on Archer Daniels. There's one that got an upgrade, seemingly breaking out after changing a bit of a trend shift. That's kind of intriguing from the chart standpoint. But Brent, I wanted to look at something that I posted on X earlier this week from that macro view briefly, and it was the dollar because the movement in the dollar has shifted. And I thought it was notable, something we have to make note of as traders, because Brent, the way down, the dollar been falling, that's been a lift to the U.S. equity markets. And it's helped out. It's been a bit of a tailwind for us. But if this broken trend is going to maintain, and I'm going to remove my oval here so we can all see it, we are pulling back today, Brent, but we are right to the confluence again of the 20 and the 50-day moving averages. If this is a breakout and throwback to support, this is possibly going to be a bit of a struggle for U.S. equity markets if the dollar continues to rally from here.
Yeah, absolutely. The dollar can affect where equities go, and things like interest rates can affect what the dollar does too. And
Yes.
it's all, and economic reports can affect the dollar, and not just U.S. economic reports, but international too. So this is all a big, everything's interrelated here, and so it's very difficult often to point to one particular cause or reason that the dollar goes up or down, but certainly the weakening of the dollar has corresponded fairly well with the strengthening of the equity market. So it's probably not unreasonable to think if the dollar were to strengthen here, that may not be beneficial for U.S. equities.
More specifically, Brent, as is asked by Zinc, which groups would maybe be a little more worried about, or maybe see a bit more pressure? I would think it would be multinational large caps with exposure internationally. Would you agree with that?
Absolutely. And the reasoning for that, everybody, is a weaker dollar means foreign buyers can buy more U.S. goods from their perspective for a reasonable price. Their currency goes further in terms of buying U.S. goods. So these multinational corporations do much better when the dollar is weakening there on that.
Yep. And so what I found interesting was the potential for a break. It looked a lot different about 4 days ago, and it was maybe a little more squirrely, so to speak. So we'll see if this continues. But the other aspect for a very quick look was watching materials, more specifically the price of gold, because we've seen an uptrend. You could see a very clear discrepancy here, Brent. These two charts working in an inverse relationship: dollar falling, gold rallying. I think it might very well be a challenge for gold to move to new highs if the dollar is suddenly going to start rallying.
You're right. There is that correlation there between the dollar and gold, and also, gold is kind of flight to safety instrument. We'll see if people get kind of spooked by the market. It's probably just going to be a matter of how much does this pullback in the market that we've seen the last few days, is that going to continue down? That could help drive some money into the gold markets there if people are a little bit worried about U.S. equities. So we'll see, but we have a pretty significant resistance level on gold there, I think just a little bit below that 3,500 level, and it'll be interesting to see if we can break that.
I agree. Obviously, the broader macro discussion could be significant, because when things shift, when they actually turn the corner, is when you'll have the greatest opportunity for a longer range trade scenario. So we're going to have to pay close attention to the dollar. Does it hold support? Does gold move to new highs? All questions we want to monitor going forward. And I thought we could look here, Brent, at the S&P as we wrap things up, because now we are up about 1/3%. And if we go back to our 5-minute bars, we could see that we've managed to maintain the pivot intraday. We're pulling back as we speak, but ultimately we're still in the same range that you and I discussed right off the intro. So if nothing else, we know that traders in the short term have a bit of an area to keep an eye on where maybe things shift over the coming couple of days. But for in the intermediate term, intraday today, it looks like those levels above us are about 63.35 and below us in the ballpark of around 62.90, all of which will help us understand where we head from here once we move outside of that range, I would think, Brent.
Yeah, nice little rebound so far. It's early in the day from yesterday's. We're not, put it this way, we're not continuing yesterday's sell-off at this point here. So that's kind of a positive for, I guess, bulls in the market short term.
Yep, I think that's a great way of viewing it, and we'll put a bow on things there, everybody. Hopefully the discussion today was helpful and intriguing for you. If you enjoyed it, we'd appreciate the thumbs up down below, everybody. We are going to get this one reviewed and archived for you, get it right back into the platform for anyone to check out on the train today or as you're doing your commute. But Brent, always a pleasure to have you. Thanks for being here, man. I appreciate it.
Thanks, Kevin, and we'll see you again next week.
Yes, you will. I will be back next week. And big thanks to Cameron May here in the chat. We had a nice, lively day in chat as usual, so always appreciate that. Follow us on X, as Cam has posted. Kevin Horner CS, Brent Moore CS, and Cameron May CS. Hit that thumbs up button for us below. Make sure you're subscribed to the Trader Talks channel here. And if you're looking to get to an event, make sure you've got that bookmarked page, schwab.com/events, live events, specifically. So with that, we'll wrap it. Thanks for being here. Have a great Wednesday. We'll see you again real soon.